Let's do some trading with Scott Bauer standing by, CEO of Prosper Trading Academy. It's time, Scott. We got earnings on really one of the best performing and very reliable consumer names the last couple of years, but it's faltered a bit these last couple of weeks.
It has, Oliver, and I think that big PE ratio, that high PE ratio, is somewhat irrelevant for the earnings print. I really do. I think you maybe have to take that into consideration a little bit longer term, but there's no question that they are best in class. When you talk about the athletic leisure wear, they are best in class. And it has been coiling. It has been consolidating right around this 50-day moving average. I am generally biased to the upside in here, but this trade setup that I'm going to talk about is more of a neutral trade setup. It's a little bit biased to the upside, but it's an iron condor. And we've talked about these before. The market maker expected move on earnings is about $35 or so. So what I'm doing is I'm looking at next week's options, not tomorrow's expiration, but next Friday the 17th. And I'm going to sell both a put spread and a call spread. I'm going to sell the 400 $395 put spread, $5 wide. I'm also going to sell the 465 470 call spread. I'm going to try and do that for about $2.50. So if I do that, Oliver, next Friday expiration, my break-even points there would be 397.50 on the downside, 467.50 on the upside. I love that range. Again, that is slightly biased to the upside, which I like that. I like based off of the technicals of the 50-day moving average.
Okay, so Scott, if we do get a bounce here, $467, your upside limit, 397.2. I mean, you could get a nice bounce and make money. You could have a pretty good sell-off here and make money. It's a pretty juicy trade. Seems like you got a lot of probabilities to work for you.
There are great probabilities on this trade. Again, especially with that market maker expected move being about $35 or so, which does make this slightly biased to the upside. And we know that volatility is going to come crashing down after the report tomorrow. So that's going to make these options worth a little bit less as well. And it's really all going to be determined. The value of the spread is all going to be determined on the move in the stock. This also, by doing this a week out rather than using tomorrow's expiration, it gives me time to adjust to if I need to roll one of the spreads, one of the sides, either on the upside or the downside. So I really like this a lot.
Okay. All right, Scott, I like it too because it works pretty well for a stock that can have some volatility in both directions. Lulu's not immune to sell-offs and drops if the numbers aren't perfect. At the end of last year, we had a notable drop on earnings, but this year it's been pretty much sunny all year. Anytime the report comes out, it's been well received. Last time it gapped up and moved, gave some of that back a little bit, but before taking off higher again. So the context here is a trend that's very much in your favor. And then if it makes the move, if it approaches one end of your profitability, then take it off, move on.
Absolutely, especially when I'm putting a position on like this specifically for the earnings print.
Yeah.
This is not an investment. I will manage it and more than likely take it off tomorrow, maybe Monday of next week.
Okay. All right. Makes sense. Selling the iron condor, giving yourself a good range here for Lulu to move around post-report. Thanks, Scott, CEO of Prosper Trading Academy out there in snowy Colorado. Not a set, not a Christmas set. That's the real deal out there.